with President Trump insisting tariffs on Canada and Mexico will go forward when the month-long delay expires next week. And that's not all. Earlier today, senior trade counselor Peter Navarro was on CNBC saying every country could face tariffs.
And those go country by country by country. We're going to come up with an estimate of how much it's costing the United States and set a reciprocal tariff immediately, assuming the investigation pans out the way we think it will. And as soon as these countries remove their DSTs on American companies, then the tariffs will go away. It's that simple. It's that common sense.
All right, so what could this all mean for markets and investors? Let's bring in managing partner at Arbroath Group, Christopher Smart. Christopher, welcome. And listen, I look at the markets today and I check the names most exposed to Mexican. We're talking about some of the auto names, some of the suppliers. They seem to be shrugging off Trump's latest remarks in the past 24 hours.
Well, I think it's hard to know what the markets are doing right now because there is obviously the economic news that has given them some pause over the last week or 10 days in terms of a slowing economy, some of the jobs numbers, the consumer expectation numbers. But I think there's also some skepticism built into the market's views about what is actually going to happen. The president has, threatened a lot of these tariffs before and has pulled back. I think right now, if I were to gauge what the market is telling us, there is an expectation that he probably isn't going to put 25% tariffs on everything coming across the border from Mexico and Canada, because the market would be trading down a lot more if there were that belief. But there is a belief that there is going to be some tariff on a lot of stuff. And the trick is figuring out if it's going to affect your industry or not.
I thought it was interesting. Our analyst last hour mentioned the case of Steve Madden, which had a big China supply chain that since the first Trump administration, it worked to relocate to Mexico. And now it faces this headwind. So what would you say from a kind of a strategy point of view a lot of these companies should do? Where's the safest place to have that supply chain? And is it ultimately going to be in the U.S.?
Well, the safest place, of course, is to go home into your closet and close the door. But if you have to do business, which most of us have to, what I tell clients is you need to keep a very sharp eye on the short term, which is what may well happen in terms of tariffs against China, tariffs against Mexico, Canada, tariffs, as Peter Navarro pointed out in your video just a minute ago, against almost every other country where a good is crossing a border. So you have to keep in mind how that might affect your supply chain. But over the longer term, I think you have to just expect you're going to have to build in higher costs for more duplication of suppliers, for bringing things closer to home, and for doing, crossing as few borders as you possibly can.
Mm-hmm.
So when you look at kind of the goalpost moving, what do you advise in terms of, is it going to be 25 and then we're going to set it there? And how do you as a manufacturer then actually say, wow, this could change in 3 months or it could get you could revert it again. So what are the best ways to kind of protect against that? Are there financial instruments? What do you look at?
Well, I think the thing that we're all trying to struggle with is to understand what is the president's plan. And at least from my perspective, having looked at the previous administration, seeing what's unfolding here, and having worked in the White House under President Obama, I'm not sure there is a real plan here. There are some ideas that they want to advance. How can we use these tariffs to put pressure on other countries for a variety of different reasons? But there's also a lot of improvisation. So I'm not sure, the president will see how these countries react. The president will see how markets are reacting. I think this is it's an important signal. You were saying earlier, these companies aren't trading off so much, but they're not. There is concern in the markets about how these costs are going to get built in. But it's another uncertainty that you can't really predict. Like a lot of building a business, you have to really just sort of do your best.
Yeah.
Maybe build in, as I say, you have to have an expectation that costs are going to go up, that moving things across borders is going to be more difficult, and that's going to ultimately wind up in marginally lower profits and marginally higher prices to your consumers.